Hey everybody, welcome to the morning market briefing. It's Monday, October 24th, 2022, guys. 1 week till Halloween. How you guys feeling?
I mean, I'm pretty excited for Halloween.
You know why ghosts can't have babies?
Sounds like a medical problem.
Tune in next week for the answer. Market rallied nicely on Friday. Really kind of on a Wall Street Journal article. That seemed to be the only thing going on. We had a couple clients calling, asking what was going on. I feel like my general stance was, hey, we'll take it. This is fun. Nice change of pace, but is it appropriate that we get an article essentially saying the Fed might do this or do that and might only raise by 50 bips? Is that enough to really move the market the way it did? I don't think so. But Tom, you were out. Any reaction to the article itself? Or
yeah, we have seen some pullback on the total number of hikes, though. If you look at the November futures, we're looking at 3.08, so we're still above 3, not by much. So I would say right now we need to be anchoring to that triple rate hike. But on the December, which was elevated and moving very rapidly towards a full 3, is now at a 46% chance of a triple rate hike in December. So we're sort of skewing back towards 5 hikes, away from 6. My guess would be this is another one of the head fakes. And we've done this. We keep going through this cycle where the Fed sort of feints that they're going to pull back in terms of their number of hikes, and then something happens, a number comes out, and they realize they actually can't do that. And so my as always, I will still say the risk is to the upside on the number of rate hikes this year, and that the surprise we could be just building a surprise for ourselves, all the while knowing it's not a surprise. Be like, oh no, they got us with 6 rate hikes. How did that happen?
Yeah.
When the whole time it's like, we've been moving in one direction this whole time. There's no real reason to pivot. There hasn't been. We've had a number of pivot rallies that did not come to fruition, and so I would treat this one the same until something different happens.
I would disagree. I think that I agree that this is not a pivot, but I do think that this article is more consequential in terms of where the Fed is, because the guy who writes the article is basically the personal publicist for Jay Powell. And basically it was framed as, we want to only raise rates, do a double rate hike in December, but we also need to come across as still being pretty aggressive in terms of wanting to bring inflation down. And I think what they're seeing is just a little bit more financial stress entering the market. But so I guess my view would be a little bit nuanced, but I would agree. We're still hiking by 50 basis points. That's not a pivot. Inflation's still rampant. And the only reason that they would slow down is because they're creating so much stress in the financial system.
Some interesting quotes from Mary Daly saying the time, and she's the San Francisco Fed Pres. Again, the time is now to start planning for stepping down the pace of rate increases. Doesn't see instability now, but the Fed could act to stabilize market. Obviously, it would be quite different than what we're seeing right there. But it's important to remember also she's not a voting member.
Yeah, and she was.
I would say all kinds of cool stuff if I was a Fed president that didn't actually have to do anything.
And she's saying how stabilizing financial markets is not like quantitative easing. Like, no, that is it's one and the same.
Yeah.
The reason the Fed stepped in March 2020 was, yes, to stabilize the markets by doing quantitative easing.
Yeah. What's their other tool? Yeah. I mean, that's kind of it.
Yeah. I think that, there was one of my old colleagues, Jason, was saying that it's used a Costanza quote. It's not a lie if you believe it. And he said, it's not quantitative easing if you really need it. and I think that's true in this case.
Busy week. One thing we're looking at is Japan. They're spending tons of money trying to support the yen, trying to avoid further weakenings. Financial Times says that they think they spent over $30 billion last week trying to support the currency. They do have a Bank of Japan meeting on Thursday and Friday. ECB meeting Thursday. Lots going on, obviously tons of earnings, but as we're looking at those meetings, what are we looking to see come out of them?
I'll go first on the BOJ. I think that you want to see a little bit more stability there. The problem is that they're anchoring the rates to 0.25%. And again, so we talked about this. In order to anchor that, you need to buy a lot of bonds. When you buy a lot of bonds with printed money, you weaken the currency. Well, then the currency gets weaker, and you don't like that, because then none of your people can actually buy food or oil or gas. And so then you have to support the currency. And so you print more money to buy the currency. And that's what they just keep doing. And so they're printing and printing and printing. And you've seen the yen weaken dramatically, and they're going to try to hold the line on Thursday and Friday, but it's getting tougher and tougher for them to do so.
I mean, if you look at the chart on the JGB 10-year, I mean, you can see where they buy, and it does no good. I mean, the yield will come down and then it shoots right back up. I mean, they're just literally printing money and then burning it. I mean, it's just a massive destruction of value. You know, I mean, even if you look around other 10 years in the region, I mean, the South Korean 10 years at a 448, you know, and Japan's trying to peg to 0.25, you know, China's at 270. I mean, New Zealand 460, Australia 414. So the whole, you know, Asian Pacific region, you know, you're looking at somewhere between 2.7 and 5% on a 10-year, and Japan wants to be at 0.25. I mean, it's ridiculous. You know, at a certain point, it does more harm to try and rein this thing in than it does just to let it blow out. And so that would be my recommendation, is to try and let the market find the actual rate, you know, and then try to adjust accordingly, and maybe use that money on something else. Maybe give it as stimulus money, use it to do something else. But if you're burning $30 billion a week to have exactly zero results, I think you're doing something pretty stupid.
It's an expensive lifestyle.
Yeah, it's very expensive. Yeah.
ECB, what are we looking for Thursday? I mean, it's just chaos in Europe.
I mean, I think that they're probably going to continue to kind of play both sides, which is to say that they want to raise rates, they want to get inflation down, but at the same time, they can't really stem the tide of rising costs, and they need to cap a lot of things like energy. So I think it's going to be another meeting where they're saying one thing and doing another, which is that they're going to be simultaneously raising rates while also simultaneously trying to ease the costs by stimulating. So we'll see if they surprise with a number of points. I haven't looked to see what their expectation is, and I can do that quickly while Ben jumps in here.
Yeah, I think it's a 75 basis point expectation there, and I think that I would agree with Tom. I think that they're between a rock and a hard place, and whatever they say, it's not going to be enough.
Staying in Europe, Johnson pulled out. Boris is not going to pursue the conservative leadership race. Where's that leave us, Ben, after I guess we're not going to have a Michael Jordan-esque comeback.
Yeah, it looks like Richie Sunak's going to be the firm favorite. There is this other lady, Penny Mordaunt, but she's now being pressed to just pop out of the race. So we could have a new prime minister today. Now, if Penny keeps going, then we could have the vote and have a new prime minister by the end of the week. But it looks like Sunak's going to be the prime minister, which we actually talked about him being the favorite to be the prime minister back in August when Boris would initially said he was going to step down. And then he ended up losing the election to Liz Truss, but now he's back. And I think that he'll be at least a steadier hand on the wheel.
Meanwhile, China has a big upset here, picked Xi Jinping for a third term. I didn't see that coming. How about you guys?
Longest tenure since Mao. And he talked a lot more about his three-step vision: retooling the economy, building a first-rate military, and instilling greater fighting spirit within the Communist Party. It does seem like they are looking to reunify with Taiwan faster than the West expected. There were some comments over the weekend from the US that this could happen even before the end of the year. It's an invasion, which I mean, it definitely is. The Chinese, and I think that's something that's really important to remember. The Chinese see Taiwan as firmly part of China, and frankly, the U.S. has never really acknowledged Taiwan as a fully independent state. They've just had this tacit acknowledgement that Taiwan is a little bit different than China, but still one country. And I think that China is going to try to force them to be one country a little bit more aggressively. And that's how they're going to play it. Whether it goes beyond that, I don't know. It seems like China's aspirations don't really go a lot beyond that, but they will be able to influence a lot more of the Asian Pacific region with Taiwan.
It'd basically be like saying that if we made Puerto Rico a state, we would be invading them, except that Puerto Rico is not economically viable compared to Taiwan, so we probably won't. Also, one thing that I thought was interesting, I don't know if you guys saw this, but Hu Jintao, who is the predecessor of Xi, got basically dog walked out of the
Yeah.
facility
Yeah.
during the I guess inauguration or whatever you call it, and it's basically been summarily scrubbed from Chinese internet. So there's been no explanation as to exactly what happened to that guy, but
Apparently he had food poisoning.
yeah, but like he basically got picked up out of his chair and walked out.
He went away.
Yeah,
He-
so doesn't look. It's a real weird look. You wonder what exactly that guy's life expectancy is at this point.
Very, very short, I would guess.
Yeah, he's about
Food
to
poisoning.
die of food poisoning as well.
Busy week ahead. Lots of earnings. Ben, Tom, what are you guys looking for this week? What's most compelling to you? Obviously, we do have Q3 GDP coming out on Thursday. We mentioned some of the big bank meetings with the ECB and BOJ. Lots of earnings. What's catching your eye?
I think it's big tech is going to be the big market mover. So tomorrow evening you have Microsoft and Google. Wednesday you have Meta, and then Thursday you have Apple, Amazon, and Intel. But you also have some interesting ones there with Visa and Texas Instruments reporting tomorrow evening, which will be a good state on the consumer and semiconductors respectively. And then on Thursday and into Friday, you have some of the energy companies, Pioneer Energy, ExxonMobil, Chevron. So I think that'll be interesting to people, but what's really going to move markets are the big tech, and probably Visa will play a role with that too.
Yeah, from my perspective, I mean, the meetings, the ECB and the BOJ meetings are going to be fine. I'm sure they'll have some sort of splash, but the big one is going to be GDP. If we get a really good number on GDP, I mean, I expect, yeah, we're going to see another big gyration on fixed income would be my expectation.
And bear in mind, I think that you're going to have a number of cross currents because we're going to be talking a lot about earnings, but then during the day, people might refocus because what happens next week? Fed meeting.
Yeah.
So, there's going to be a lot of moving pieces this week. So it'll be, today's a relatively calm day, not so for the next 4 days.
Yep. All right, we'll wrap it up there. Dow futures up 42 basis points. S&P futures up about 1/3%. NASDAQ futures just up a tick. So we'll be back tomorrow morning at 8:30. Hope you guys have a great day, and talk to you soon.